Hey, how you doing? And welcome to Livewire's Buy, Hold, Sell. I'm Ali Selby, and today we'll be taking a look at 3 under-the-radar stocks as well as 2 that have run far too hard. To do that, we're joined by Elston's Justin Werner and Ellison Capital's Nick Sladen. Okay, first up today we have Navigator Global Investments. It's a Brisbane-based alternative investment management company with an $822 million market cap. Nick, I'm going to start with you today. Is it a buy, hold or sell?
It's a buy from our perspective. We think it's the cheapest way to access alternative investments on the ASX. New CEO Stephen Darke came on board in October of last year. He's doing a really good job in terms of getting the business performing quite well. Its largest stake in manager, a business called Lighthouse, has actually just gone back above its high water mark, so it's in performance fee zone. It's averaged $65 million in performance fees over the last 5 years. It's got $100 million in capital available to grow via M&A, so we think there's organic and inorganic opportunities for growth, and for all that's on a single-digit PE, which is well below many global competitors.
Okay, that said, it still is yet to recover from the COVID crash. Its share price is still in the red since then. It has had quite a good 2024. Its share price is up 50%. Justin, can it keep going like that? Is it a buy, hold or sell?
Ali, for us, this one's a hold. So I'd agree with a lot of the points that Nick said. There's a lot of things to like about this business. But I think really for us, we've probably just got some concerns, a few more concerns around sort of the medium-term ability to drive that AUM growth. And then sort of in the short term, we're probably a bit more concerned about the OPEX growth as well, which has been quite strong of late. So for that reason, we're probably more of just a wait and see with this business.
Okay, next up today we have Monash IVF. It has a market cap of $580 million, and of the 5 brokers who cover the stock, all rate it a buy. Justin, do you agree? Is it a buy, hold or sell?
We do agree. For us, this is a buy. We really like this business. We're attracted to businesses that operate in industries with structural tailwinds, and we think IVF definitely has that. Management operate really good, high quality facilities. We think that goes towards better patient outcomes. The 2 main competitors are both backed by PE, which we think creates uncertainties for their specialists longer term. So Monash, on the other hand, has been doing a really good job of recruiting specialists, growing their network, and we think this business can just continue to take market share over the medium and longer term.
Okay, Monash's share price is up around 16% since the beginning of the year. Nick, can it keep going higher? Is it a buy, hold or sell?
Trading on 20 times earnings at 52-week highs, we're happy to sell it at this price. We think IVF is expensive, and in this cost of living pressure environment, people will scrutinise that, and there are alternative options out there. We also have some concerns about doctor-listed models. We've seen in the past, Monash is not immune from this itself, that some of the doctors do leave and they do take patients, so that's just an element of risk, and at all-time highs, we're happy to sell it.
Okay, last up today we have Bravura Solutions. It provides licensing, development and software services to the wealth management industry. It's had a ridiculously good 2024 after an already fantastic 2023. Its share price is up 73% since the beginning of the year. Last one for you today, Nick. Is it a buy, hold or sell?
It's a hold from our perspective. The new management team's done an outstanding job of re-cost sizing the business. They've taken $40 million of costs out of it, and they've got line of sight to $65 million, driving the business back in terms of return to profitability. The top line's actually not growing that. They've guided FY24 to be in line with FY23. So we're happy to hold at this point in time while management works on growing the top line and see how it all plays out.
Okay, 3 brokers cover the stock, 2 rated buy, 1 rates it as a hold. Justin, what do you think? Is it a buy, hold or sell?
For us, it's a sell, Ali. I think this is one actually that we did previously have in the portfolio at one stage. I think we underestimated the amount of structural change that was occurring within the industry and probably overestimated the amount of competitive advantage that we thought the business had. I'm not sure if much has changed. I agree with Nick. New management has definitely improved profitability, but most of that's been through cost cutting. So I'm not sure what impact that'll have on the business longer term. And then outside of that, I think we've just got ongoing concerns about the potential for management to drive client activity, pricing, and that top line growth, which I think the valuation is really calling for.
Okay, we asked our guests to bring along one overcrowded darling that they think is due for a pullback. Justin, I'm going to start with you. What stock are you selling right now?
For us, it's Navigator. So once again, this is another one that we had in the portfolio. We sold out mid of last year just on valuation basis. So, we pushed our financial models very hard. We were very aggressive. We couldn't really make the valuation stack up. We couldn't get an adequate level of return out of this business. And on that note, we have concerns going forward. So we think it's priced for absolute perfection, and we've got concerns around the quality of the store network. It's really easy to just pump stores out to grow that store network. I think it's harder to maintain the quality. So we wouldn't be surprised if over the medium to longer term we see a deterioration in the quality of the store network and the underlying store economics.
Okay, Nick, your time in the hot seat. What stock do you think has become way too hot, it's overcrowded, and you're selling right now?
We're happy to sell Gentrack. Market cap's around $800 million. Like Bravura, management's done an amazing job turning the business around, delivering 6 upgrades since the middle of 2021. And there is a really good market for cloud-based utility billing systems, but we think it's captured in the current market valuation. We've recently seen several brokers initiating with buy reports on that after the stock's risen 600% in the last 12 to 18 months, which perhaps might give some investors an opportunity to exit that position. We've got valuation over 30 times EBITDA, and we're happy to sell it at this point in the cycle.
Okay, well, I hope you enjoyed that episode of Buy, Hold, Sell as much as I did. If you did, why not give it a like? Remember to subscribe to our YouTube channel. We're adding so much great content just like this every single week.